Good morning. Good morning and indeed good afternoon to our distinguished panelists and to all of you joining us online. My name is Vincent Keaveney. I'm the Lord Mayor of the City of London. And for those of you who don't know, that role means I am an international ambassador for the UK's financial and professional services, work where I'm supported by Alderman Alison Gowman, one of the two sheriffs of the City of London, who joins me on this visit. This seminar is an important part of that ambassadorial work, forming part of my virtual visit to China taking place over the next 4 days. An important visit where I can share what the UK financial and professional services have to offer international investors, which is what we're talking about today. The UK's financial services sector is one of the most open, innovative and dynamic in the world. Now you may well think, of course he would say that, but you only have to look at how resilient these services have remained, navigating the challenges brought by both Brexit and the pandemic to understand their strength. As a global centre of finance, we are confident international advocates for openness and competition, whether it's renminbi products, leading innovation in fintech, or as a global hub for green finance. The UK can use its world-renowned financial services sector as a platform to drive progress on a wide range of global priorities, and importantly, to act as a springboard for businesses which are looking for international expansion. This isn't posturing, this is a fact. Earlier in January, the City of London Corporation launched the second edition of its benchmarking research which we will discuss in a little more detail shortly. Research which outlines and promotes London's and the UK's global competitive offer. It shows that the UK has a world-class fintech and innovation offering, that it brings together innovative minds, supportive policymakers, and the finance required for ideas to take off. And it remains the only global financial centre that tops both conventional and green financial centre rankings. We continue to have the most favourable regulatory regime for financial services, and we remain the most globally connected banking centre, providing financial services to partners around the world. The last point is a very important point for me. I'm incredibly proud of the UK's global business connections. Take China, for example. The number of UK-based Chinese businesses is growing. We've almost 850 Chinese businesses making over £5 million a year. And some of our strongest ties with them are in the financial services sector. At the City of London Corporation, we recognise the importance of establishing international partnerships, including with China. And since 2008, we've had a presence in Beijing and in Shanghai with our representative offices. As China's financial services sector continues to open up, we seek to work with our partners in China to support growth of the sector and to showcase opportunities for Chinese investors to expand their businesses internationally through the UK. That message is at the heart of our Global Investment Futures campaign, which the corporation launched jointly with the Department for International Trade and the Investment Association. It's all about sharing the UK's expertise and experience as a leading investment management hub with our international partners. And as the largest centre for asset management outside the US, the UK is well placed to support Chinese investors to use the UK as a platform to attract international capital to enhance their investment diversification and risk management. Ladies and gentlemen, I want to thank you all for being here with us today. Our panelists today will be able to share more details on this. So without further ado, I'll now pass it on to Max, who will share with us some key findings from the City Corporation's benchmarking report. Max, over to you. Thank you all very much.
Thank you, Lord Mayor. Good morning and good afternoon, everyone. Economies across the world are responding and adapting to significant change. COVID-19 challenged global markets and physical flows, accelerated the pace of the digital transformation, and necessitated new ways of working. Climate change requires the support of global finance for global solutions. And despite continuing geopolitical shifts, we need global cooperation to effectively address these challenges. As the City Corporation, we spend a lot of time talking to businesses about how a London location helps them innovate and grow, ask new types of firms why they are coming to the UK, and talk to international individuals at different career stages about what London's offer is to them. Naturally, they are asking about how we in the UK are meeting these challenges, why they should come and set up a business here, why they should come and live here. And understandably, they are asking for evidence. They want us to prove it. So this is why last year we set out to do an annual benchmarking study. A study that is based on evidence and data and compares the UK's global offer to business with that of other major financial centers. This second edition of this study, which we published earlier this year, once again gives us a snapshot of London and the UK's competitiveness. It shows us where the UK's offer is strong and tells us where the UK needs to learn from other centers and get better. And not just us, from the people we talk to policymakers in the UK and investors across the globe, everyone can use this collection of data and analysis to learn more about how London and the UK and other major financial centers in the US, Europe and Asia are performing in this critical time. To access partners, clients, talent and capital, connectivity is key. And as we demonstrate in our study, the UK continues to build on its historic strength as one of the most globally connected financial centers in the world. So let me share a few figures with you. The UK is the world's largest center for cross-border banking. 15.3% of the outstanding value of international bank lending in 2021 was owed to banks located in the UK. That's more than $5.4 trillion. London captures by far the largest share of global FX turnover, 43%. That is $3.6 trillion per day and more than the US, Singapore, Hong Kong, Japan, France and Germany combined. And the UK is Europe's leading center for asset management, with more than $8.6 trillion under management, of which nearly half are managed on behalf of international clients. I could continue. All these numbers, these huge numbers, demonstrate the ability of firms in the UK to access global capital, liquidity, and funding. But you may ask, do the markets really need financial centers? Especially nowadays, where so much stuff is happening in clouds, where we can work from anywhere and do everything remotely, even this event today. Well, we are talking about exactly that with firms. And they say they still value and need the proximity they have in London, the dense ecosystem of expertise, the co-location of banking, insurance, asset management, accounting, legal services, consulting, and the access to talent. London remains the global city of choice, according to recent Boston Consulting Group research. Even during the pandemic, London topped culture rankings. And this is appealing. A massive 40% of workers in the city come from abroad, 15% from the European Economic Area, and another 25% from the rest of the world. So London is a place where businesses can hire from a multitude of backgrounds and experience. But policymakers need to guarantee that the UK's attractiveness to international talent does not decline further. And London is also a place from where any part of the world is within reach. In terms of working from home, the UK's time zone allows businesses to cover major markets to both east and west from a single location. And as the world is opening up, London's huge international airport capacity, larger than in any other financial centre, enables you to get to your clients and partners quick, wherever they may be. We do need faster internet connections in the UK though, and more investment in London and the UK's transport infrastructure. Because whatever advantage the UK may have today may not be an advantage anymore tomorrow. So we constantly need to review the health of our business environment and of our regulatory and legal system. The UK is still the world's preferred regulatory regime for financial services, according to an executive survey. 31% of executives name the UK, more than the US and Singapore. and London remains the top global seat for arbitration, with 54% of executives naming it as one of their organization's 5 most preferred seats, a rank shared with Singapore. In our report, we showcase that firms located in the UK benefit from strong legal environment, transparency, and innovative regulators. After being the first market to introduce a regulatory sandbox and open banking, in 2020, the UK's Financial Conduct Authority created the world's first regulatory digital testing environment. This is helping innovators get to market quicker. And the FCA is connected with regulators around the globe, which supports firms to access other markets with their ideas and products. But as I said, the UK needs to ensure that its business environment remains healthy, that the cost of business remains low, and that the UK's new economic relationships with the rest of the world reflect that services trade is at the heart of the UK's economy. This is why across many initiatives and reviews, the UK Listings Review, the Khalifa Review of UK FinTech, the Future Regulatory Framework Review, the UK government is proposing measures to keep the country's financial services regulation coherent, agile, and internationally respected. And it is looking to include financial and professional services in free trade agreements, mutual recognition agreements, and regulatory cooperation to ensure continued market access. To future-proof the UK's offer and to respond to some of the challenges I outlined earlier, innovation is key. And for an innovative ecosystem to work, it is crucial to get the fundamentals right. The UK does that. It brings together innovative minds, supportive policymakers, and the finance required for ideas to take off. Between 2016 and the first half of 2021, investors poured $136 billion into UK fintech. That is 9 times the amount of investment in France. The access to talent is one of the reasons why UK fintechs are so successful, as we are demonstrating in our report. The UK has a higher share of tech-relevant graduates than, for example, Singapore or Germany, and many of the UK's world-leading universities offer courses in financial technology. And the consumer base is open to using fintech too. Even before the pandemic, 71% of the UK's population had used 2 or more fintech services like budgeting, making payments, or transferring money, and that share has only grown in the last 2 years. Digital skills in the population need to improve here and across the globe, and public institutions and businesses in the UK are joining forces to identify and address skills gaps. But tech is only one part of the UK's innovative ecosystem. One other big question is how finance can help fund the fight against climate change. London remains the only financial centre that tops both conventional and green financial centre rankings. And after COP26 last year secured strong commitments on net zero, UK financial and professional services are now offering their expertise. A high share of them is signed up to principles such as science-based targets, the principles for responsible investment, or the principles for responsible banking, and sustainable finance activity in the UK is picking up across asset classes, particularly in equity markets. So, global connectivity, a supportive business environment, innovation. These are just some elements of the UK's global offer to business. And you will find these and many more data points and comparisons in our report, which you can access on our Global City website. Using 95 metrics and 5 competitiveness dimensions, that is innovation, financial reach, infrastructure, people, and business environment, we are measuring London and the UK's competitive position as a finance and business centre. We evidence the UK's strengths and highlight areas for improvement. Overall, London and the UK come out ahead, not because we come top in every dimension. We don't. We lead in innovation and come second in financial reach and infrastructure. And we can see that all centres have strengthened their offer since our first study 1 year ago. But what is critical and special about London and the UK is the depth and breadth of its offer. Having that connectivity, resilience, talent, access to capital, and ability to innovate all in one place. Our report gives evidence to inform decisions on where to do business, where to locate, and makes a compelling case for London and the UK. And we hope to spark a conversation about what the UK needs to do to maintain this offer well into the future. Thank you. And we hope to see you here in the UK very soon. Over to you, Christian.
Thank you, Max, and thank you for that important and insightful presentation. Well, good evening to those in China and good morning to those in the UK. My name is Christian McIntosh, and I am a director for KPMG here in London. As a business which has been operating in the UK for 150 years and also has a long-standing and very strong commitment to China, it is a great pleasure for us at KPMG to be supporting the Lord Mayor's virtual visit to China this year and this session today. And I am thrilled to welcome an illustrious panel of guests over the next hour to discuss the state of UK-China business relationship and how we can further strengthen the economic ties between our two countries. Our panelists today are, I suppose, a living embodiment of the close economic links between China and the UK. I'll ask them to introduce themselves shortly, but today we're joined by Stuart White, who is the UK Chief Executive Officer and Global Head of Strategy for HSBC Asset Management, by Jin Ning, who is Executive Director for Investor Relations at Fosun, by Xu Jinhao, who is Deputy General Manager for China Construction Bank in London, and by Gavin Ralston, who is Head of Strategic Clients at Schroders. First of all, I wonder if you could all briefly introduce yourselves and your businesses. Stuart, perhaps we can start with you, please.
Thank you, and thank you very much for having me today. It's an honour to be here. My role is Chief Executive Officer of our HSBC Asset Management in the UK and Global Head of Strategy, and that's essentially we operate across 25 countries as an asset management business. We manage about $640 billion. And essentially are creating the bridge between East and West. HSBC has been in existence now for about over 155 years, and as is in the name, our heritage, it was born from China in Shanghai and Hong Kong, and we're very proud of the connections we have and the international connectivity we have between Asia and the rest of the world. And I'll come on to that in more detail a bit later on. And probably just one final thing to say, I'm also very honoured to represent the asset owner side of the equation as well. I chair the investment committee of our HSBC Bank Pension Trust. That's the employee pension scheme, which has about 250,000 members and about £37 billion worth of assets. So I know there are lots of asset owners on the call today, and I can give you a perspective of what it's like to run and be part of an asset owner in the UK as well. Thank you.
Excellent. Thank you, Stuart. Ning, perhaps we'll turn to you next.
Thank you, Christian. Good morning and good afternoon, everyone. I'm Ning Jing from Fosun International, and I'm based in London covering the investor relation and treasury functions. So it's a privilege to be here and sharing my experience and the Fosun experience with you all. So I would like to start with a brief introduction of Fosun and our business. I believe a lot of you are familiar with Fosun. So Fosun was founded in 1992, and this year it's our 30 years anniversary. Our business mission is to provide high quality products and services for the family around the world in the area of health, happiness, wealth, and intelligent manufacturing segments. So as a global corporate, we operate across many regions, including Europe, US, Asia, etc. And our business in UK, including asset management platform Resolution and the world top nursery brand Silvercross, the Premier League team, Wolverhampton Wanderers, etc. And also, besides our business in the UK, we set up our IR, the investor relations and the treasury function in the UK to cover the European region, also because of the advantage of London as the most important finance center in the world. Thank you, Christian.
Perfect. Thank you, Ning. And Jianhao, perhaps we'll turn to you next.
Okay, thank you. Thank you, Christian. Thank you for having me. My name is Jianhao Xu, Deputy General Manager of CSB London branch. The China Commercial Bank is second largest bank in China, and is almost one of the earliest Chinese bank who established presence in city of London. So we provide a service for Chinese subsidiaries and the local companies, and was designated as a sole RMB clearing bank in the UK. So apart from that, HSBC and the CCB are both co-hosts of the UK China Financial Service Summit. So I'm confident that together, so we can enhance and advance the global connections to the overseas investors. Thank you.
Thank you, Jinhao. And lastly, Gavin, please.
Thanks, Christian. Good morning, good afternoon from me, Gavin Ralston, Head of the Strategic Client Group at Schroders. Schroders are a global asset management firm. We're based in the UK and manage just short of $1 trillion in assets under management. We've just reported a strong year in 2021 with $45 billion in net new business. We're a multi-product firm, strong capabilities across fixed income, equities, multi-asset, and a number of private asset classes. Although we're based in the UK, about 60% of our revenues arise from clients outside the UK in the rest of Europe, North America, and APAC. We see China as an important growth opportunity. We have a long-standing joint venture with Bank of Communications, which has already contributed significantly to our growth. We announced earlier this year regulatory approval for a joint venture wealth management company, a WMC, with Bank of Communications to be launched shortly, and also a wholly owned FMC business. We've been managing money for some of the largest asset owners in China for a number of years, and we have offices in Shanghai and Beijing, as well as Hong Kong. Looking at it the other way around, we have a range of successful products which enable foreign investors to access both Chinese equities and Chinese bonds. Thanks, Christian.
Thank you, Kevin. Now, before we move on to the formal sort of question section of the panel, just a reminder to everybody that we will be taking questions at the end. So please do send those through. You can send them to hosts and panelists or otherwise in the Q&A section, and we will try and pick up those questions at the end. So, Stuart, if I could turn to you first. Max talked about how the UK remains the world's leading international investment centre. Obviously, HSBC is a UK headquartered global organisation and a key part of that infrastructure. So from your perspective, what does global connectivity mean in real terms for overseas investors and asset owners?
Yeah, thank you, Christian. So just going briefly back to our organisation. As I said, we are a global firm. We have operations in 25 countries around the world, spanning from the Americas, from Canada, all the way down to Argentina, through Europe, the UK, and across into Southeast Asia. Within those 25 countries, we actually manufacture in 16 of those countries. So we're very much on the ground in the countries in which we operate, including China. In fact, we have a very long-established FMC in China, in Shanghai. Now, to operate a global firm, asset management firm across all those countries, and bear in mind we provide services to the clients of the HSBC Group, which is obviously a global bank, which covers financial institutions, corporates, all the way through to private banking clients and retail clients. We need to operate across the world in a very effective way, and we purposely have the majority of our management committee, so that's a 12-person leadership team based out of London, and we have around 2,700 staff around the world. And one of the benefits of being in a financial centre like London, particularly in terms of being headquartered in London, is of course the time zone, and the fact that we can operate across different time zones very effectively as a leadership team, being based in London, covering obviously early morning calls with Asia in the morning, and then cover the Americas in the afternoon. So it's not to be underestimated how important that is, particularly when you're working on a cross-border basis. I think that the second thing is London and the UK as a financial institution is very established. It is has a huge amount of resources, whether it's a multicultural society and multicultural people. I mean, we have over 30 different nationalities working in our London operation. We have about 700 people covering a whole range of the capabilities within the asset management company, from investing in different asset classes, through to finance, through to risk management, through to compliance, through to sales and operations, as you would expect. The pool of talent in London is quite remarkable, but also actually attracting talent from different countries into London, I think is another key and important aspect for asset managers, asset owners, financial institutions in the UK. And one of the reasons for that attraction is we have a fantastic educational segment, some fantastic universities, great schools. We also have a very innovative sector as well when it comes to our educational bodies, and particularly around some of the emerging and important trends which Max highlighted at the beginning around sustainability. And I think this is an area I like to think of it as sort of the next industrial revolution. We're moving into now a sustainability revolution, which is really capturing a huge amount of interesting investment and intellectual capital around the world. And I think London, the UK, is a real hub for that intellectual capital. So from an asset owner perspective or a financial services perspective, coming to London is a very positive thing to do. Very practical as well. I mean, I just one very practical example is in terms of investing, we have a huge number of company roadshows that will actually come through the financial centres in the UK, through London, through Edinburgh. And so in the Square Mile in Canary Wharf, we can get access to management of companies, both listed and indeed unlisted companies who will be coming through the country and our cities on a regular basis. It's a very efficient way for our analysts to get access to the information and see the management firsthand. Clearly, in a virtual world, it's a lot easier now, but certainly it requires less travel when you're based in the City of London. So I think that's a really important point. I think the other thing to say is around sustainability, and I've touched on this already, but green finance, sustainable investing, and the innovation around those two aspects are really an aspect of the UK and London that I'm particularly proud of. And I've experienced this both from an asset management perspective. Our firm, we manage, as I said, about 640 billion of assets. Over 90% of those are what we refer to as ESG integrated, and where we actually have an ESG screening and an ESG engagement and stewardship model. We also, of that 640 billion, about 30 billion now are in what we would say is high impact or ESG aware strategies, whether it's low carbon, equity or fixed income strategies, or all the way through to more liquid strategies, infrastructure equity, infrastructure debt. And last year we launched quite an innovative new joint venture to invest in natural capital called HSBC Pollination Climate Asset Management. So looking at a whole new area around biodiversity and investing in nature-based solutions. So that's on the asset management side. On the asset owner side, having access to the investment management community here in London, and that includes a lot of international asset managers, provides an excellent source of diversification. The pension scheme that I lead the investment committee for, we actually have an outsourced model where we work through 3 leading investment consultants, which is another part of the ecosystem in London, and then through 29 underlying asset managers, including Schroders actually, who are on the call today. And that access to first-class capabilities across the full spectrum of listed and unlisted or liquid strategies, particularly around sustainability, is very, very important to us. We actually announced ahead of COP26 last year our net zero ambition as a pension scheme, which is very progressive. And we believe we can do that because we have access to the right capabilities through the asset managers that we work with here in the United Kingdom. So I think London is a great place to do business. It's a great place to connect around the world, given the time zone and the global footprint of organizations headquartered in London. And of course, it is a great place to start to realize our net zero ambitions around the sustainability transition. And then last but not least, I think it's also a fantastic place to connect to China and both ways. So we have a huge amount of connection to China, as you heard from my colleague here from Schroders, but also through HSBC Asset Management. We have been connecting with China for many years now, whether it's bringing international capabilities into China or bringing China assets into international markets. And I think that's a really important point about the financial service sector here in the United Kingdom. Christian, with that, I'm going to pause.
Thank you, Stuart, and thank you. You touched on a number of really important issues there. I think the green finance and sustainability topic we'll return to in just a moment, and likewise the connectivity to China. I just wanted to pick up briefly on something you mentioned earlier around the diversity of the workforce. Ning, if we look at Fosun, for example, a global conglomerate, but very much China-based, but with a strong presence now in London, how easy do you find it to convince colleagues from China to come to London? Is the UK an attractive place for the Chinese workforce to come and live and work?
Thank you, Christian. I think it's a very good question. So I'll probably put it into 2 ways, because our London office has been here almost a decade time. So every time, because through the almost 10 years, at a different stage of the company development, we require different talents. And we find London is a better place to be because it has a great talent pool already accumulated from years, not just on the investment, but also on the business operation as well. So for example, when we hire someone for our European business operation, actually the candidate actually is from London. So, and also all the resources are based in London. So we have to work out the hybrid working model to make sure they can support the European business, but the people still based in London. So I believe the great pool of the talents is one of the advantage of London. And in terms of keep attracting the new talents from international, I would like to use myself as example. I came to London about 4 years ago. Before that, I did my business school in London. And after so many years, left the school doing another, really enjoy the school time. It's enjoyable, but also in London, it's eye-opening. And because of the further education facilities in London, definitely can further enhance or advance the career for a lot of people. And at the same time, I've come to London and I find a lot of the information, especially what Stuart mentioned in terms of the ESG development on the investor side as well. London still has a huge base on that. So from my own perspective, I think London is the most attractive people for, especially the experienced people, to further enhance their knowledge and career as well.
Excellent, very glad to hear it. Now then, Stuart also mentioned that the connectivity into China, and Jianhao, if we turn to you now, please. Obviously, as you mentioned in your introduction, China Construction Bank is the UK-based, the London RMB clearing bank, I think since 2014. I wonder if you could briefly comment then on what you see as the status and the opportunities for UK-China connectivity in financial services, and I suppose the role of CCB in supporting that through that RMB clearing capability.
Thank you. UK-China economic and financial cooperation have been positive. The two-way trade and investment has continued to grow steadily. Post-Brexit in 2021, the UK-China trade in goods exceeded 100 billion US dollars for the first time. China is now the third largest trading partner of the UK. Chinese-owned companies employed almost 61,000 people in the UK and contributed a total revenue of 63 billion pounds to the country's economy in 2021. Many people may ask why Chinese companies and institutions would like to come to London and why China-UK trade and commerce are still strong and thriving in the current circumstances. On the former, it's because London has core competencies that are not found elsewhere, not even in New York. Further, London has a well-developed financial system and supporting services, a policy environment that is friendly to the financial industry and multinational companies. In addition to this, London is the world's pioneer in leading green finance and financial technology. On the second issue, China and the UK have highly complementary strengths in trade and commerce. The UK has world-class research, innovation, and cutting-edge technology. And China has clear advantages in technology application, supply chain flexibility, and market scale. So when UK R&D investment results are transformed into products in China, creating benefits and ultimately feeding back into the UK's economy, this is truly a symbolic relationship. CCB has been a loyal supporter and a promoter of UK-China trade and investment. CCB also acted as the key contributor to London offshore RMB market. In particular, since being designated by People's Bank of China as the sole RMB clearing bank in the UK, CCB London has achieved accumulated clearing volume of RMB exceeding 64 trillion from 2014 to 2021. It shows CCB determined efforts to make London the largest offshore RMB clearing center outside of China. It also once again demonstrates the long-standing competitiveness of London as a vibrant global financial center. Leveraging the City of London's key position, CCB has been actively promoting two-way investment connection and attracting global investors to the Chinese capital market. We are one of the first banks that participated in the launch of Shanghai London Stock Connect, providing foreign exchange and clearing services to the 4 Chinese listings in London through partnering with relevant brokers. Looking forward, so we are keen to continue collaborate closely with the City of London, leverage our capabilities together in fostering the bilateral relationship between UK and China. Thank you, Christian.
Thank you. And on that note then, Gavin, obviously Schroders, as you mentioned earlier on, has got a strong UK-China corridor. You have the joint ventures in China. Perhaps you could just expand quickly on how an institution like yourselves is able to help Chinese investors access that wider investment pool globally through the UK.
Yeah, thanks, Christian. I wanted to focus in particular on the way in which we approach innovation as being one of the key ways in which we can help Chinese investors. Many industries are being disrupted by new technology, and asset management is no exception. So it's essential for an established firm like Schroders to be constantly aware of innovation, to be able to offer new strategies and techniques to our clients, and to respond to disruption. In the past 10 years, the main source of disruption in asset management has been caused by the advent of ETFs. Right now, the largest area of innovation is ESG, with new products launched in response to new areas of demand, new challenges in the measurement of portfolios, in reporting, and in disclosures. We believe very much that the most successful asset managers in supplying successful strategies to their clients will be those that embrace disruption and those which are at the forefront in digital technology. And that's where being based in London really comes into play. To give you some more specific examples of what I mean, we're seeing arising in China and elsewhere new digital wealth players who are differentiating themselves from the incumbents by enhancing the client experience and often building in much greater personalization. Incumbents are also building in, raising their digital game to address the attrition risks for this client base and the more fragmented distribution landscape. And much of this innovation is happening not just in London, but in China. One of the things that we aim to do is very much part of our strategy is to offer more customized solutions. These could be separately managed accounts or bespoke white label strategies, and demand for these is growing as intermediaries seek to take a greater share of the value chain. The extreme example of this is what we call hyper-personalization, where clients are demanding a lower minimum size for segregated accounts, increasingly demanding solutions which cannot be met by traditional pooled funds. The consequence of this is that asset managers will need to make a step change in the volume of products, of individual offerings that are available to clients. So what have we done at Schroders? In investment, we built a large data insights unit to help our portfolio managers make better informed judgments based on the data. This proved particularly invaluable during the COVID-19 pandemic. We've raised our game in digital analytics to understand better what our clients are doing and how they react to different market circumstances. We've also put additional resource into digital marketing. On the back of that, we're building new partnerships with digital distributors, and we recognize that the products these distributors demand are different from traditional asset management products with a focus on simplicity. We're also doing a lot of work on digital assets. We don't invest in cryptocurrencies or offer crypto, but we are looking at the use of tokenization as a means of delivering private assets in a way that can be accessed by much smaller customers than has traditionally been possible. And we've entered into several partnerships with fintechs to access their skills. We at Schroders are fortunate that as a global asset manager, we can access these skills and technologies wherever they're available. But we're also fortunate in being part of the innovation ecosystem here in the UK, and we're constantly on the lookout here for digital talent with the skills to develop the strategies I've just described. The UK has that cluster of skills. Something like 10% of the world's fintechs are based in the UK, and we need to remain a welcoming environment for international employees. The other characteristic of an environment which is conducive to innovation is regulation, or perhaps I should say clarity of regulation and urgency in addressing the implications of new technologies for both consumer protection and the functioning of financial markets. So we welcome the FCA's regulatory sandbox, the Open Banking Initiative, and the Bank of England's proactive approach to central bank digital currency. There's a lot more I could say about innovation investment and much that we can learn from China and its adoption of digital, but I think, Christian, my time is up.
Actually, I'd love to pick up with you briefly, Gavin, on that last point around learning from China, because obviously Schroders, you do have a very large sort of investment in fintech and building out your own digital capabilities. China, clearly a market where on the digital distribution side and the kind of broader access to investments via digital, really ahead of the curve in many ways. I wonder how Schroders is able to integrate some of those capabilities you see coming out of markets like China into the global offering that you have.
Yes, and one of the points I made a moment ago was the simplicity of products that new customers of asset managers are looking for. And that's one of the lessons from China, where some of the very large scale new product innovations coming out of there are actually quite simple in terms of the investment content. They're less simple and require new technology in terms of distribution. And that's where we are putting a lot of effort in making sure that we can make available new investment ideas through non-traditional customers through the use of very non-traditional distribution systems. So that's a good example of where we're learning a lot in the UK from the experience we've had in China.
Excellent, thank you. And Stuart, I know when we spoke earlier, you mentioned that you have, as an organisation, links into a number of academic institutions. And if we think about innovation more broadly, clearly a lot of the cutting edge research, as Jahan mentioned earlier, happens within the academic sector. So perhaps you could just talk a little bit about how that informs the way that you approach innovation as a business.
Yeah, thanks, Christian. So, one example, just going back to sustainable or sustainability that we've been looking at recently, it's quite fascinating. It's looking at the interconnectedness of climate change, biodiversity loss, and healthcare, all incredibly important subjects. And we've been having discussions with a renowned educational institution called the London School of Health and Tropical Medicine. They're a very, very old university that many years ago did a lot of work around cholera, around Ebola, and of course recently around coronavirus. And they're actually setting up a new institute called the Institute for Planetary Health. So thinking of the health of the planet as in a more holistic way. And of course, the interconnectedness that I refer to is clearly climate change is an existential issue that we're all concerned about and we're all trying to find solutions for around the world. But it's not just about the burning of fossil fuels. Clearly, the loss of biodiversity through taking down rainforests is exacerbating the problem because, of course, you're losing a carbon sink. At the same time, you're actually getting nature and humanity closer together, which is leading to new variants and new viruses. So then there is a correlation through to pandemic risk. So this institute is actually being funded by various different institutions to come up with new science around that interconnectedness. And creating academics, but also financial specialists for the future who will then go into the investment management industry or the finance industry. So that's just one example of where I think the UK and London really is bringing some of the very strong educational capabilities we have and linking it to real world issues and obviously linking it to finance. And that is one area that I mentioned earlier on that we're particularly interested in working and evolving this whole new area, new asset class around natural capital. So nature-based solutions, which I personally believe will become a huge opportunity for investors in the future to diversify, but also to address their net zero ambitions.
Excellent. And Ning, then on the subject of, I guess, sustainability, if you look at a business like Fosun, you have probably two ways of looking at sustainability. There's your internal corporate responsibility activity, and then as an investor, there's the ESG criteria that you build into your investment process. Stuart mentioned COVID-19. I know that Fosun has done a lot around support in the COVID crisis. Perhaps you could just talk about that and then also about how you bring in ESG criteria into your investment decision making. And I know you route a lot of that through the UK. So how has being in the UK helped you to deliver that strategy?
Absolutely. Thank you, Christian. I think ESG has become more and more important, not just in the world, but also in the China agenda as well. So the ESG for Fosun has been set as a high priority in our strategy and also on the daily operation, and is also part of our board directors KPI. So as a large corporate, we focus on the family consumptions, and our vision is to create a happier life. So the sustainable development is critical to us. And we say, because Fosun is a big conglomerate, even we're rooted in China, but half of our assets are based in overseas. We believe this stronger capability comes with more corporate responsibility. The one you mentioned during the COVID-19, we provide our support At the beginning it was to the China, then to the world with our supply chain facilities and also medical supplies to all the front lines. I think that's how we demonstrated our social responsibility. But also at the same time, we together with our portfolio companies actively participate in many international ESG associations to make sure we have appropriate framework in the ESG management, because our business actually across a different industry. So in each different industry, they will have different ESG criteria and framework for the better outcome at the consolidated level, at the group level. And at the same time, we have very solid ESG governance in place, including the ESG, at the top it will be the board director, then it will be the ESG committees, and we do daily liaison with our portfolio companies and also different teams in the group to make sure we have the daily execution on the under the ESG directions. And also externally, we closely liaison with different ESG rating agency, not just for the ratings, but also we get a comprehensive coverage of each different ESG areas we need to focus on. So I'm very proudly to share with you that we are the only conglomerate with the MSCI ESG rating AA in China mainland, and also on the FTSE Russells and S&Ps, these ESG rating and scores are all above the global industry average. So this is how we're looking at ESG as a very important priority for the group and also the subsidiaries operation. And in terms of the ESG linkage to UK, I think importantly at the same time, it's a two-way communication, as Stuart and Gavin mentioned. At the same time, we learn a lot from our investors and also the banking partners, especially from the UK market, because UK is expected to be the world leaders on the ESG standards. And for example, UK hosted the 26 UN climate change conferences and brought all the parties together to accelerate the actions for the climate change. And the UK government had released the roadmaps to the sustainable investing. And the UK asset managers lead all the major market globally for incorporating the ESG activities into the operation and disclosing ESG matrix. And Fosun has a very large base of the international investors who are UK based and also provide a lot of valuable insights and feedback to us on how to progress our ESG further. For example, on the TCFDs and also on the science-based target and also on the biodiversity. They all have different feedback to us on how to progress our ESG further. And also internally, I'm based in UK and I closely liaison with our ESG committees at the headquarters. We regularly collect and review all these key ESG topics that has been discussed during the roadshows or with our investors, and feedback to our board on the further actions and executions. So this two-way communication with investors has greatly helped Fosun to take a leading position in ESG among the Chinese corporates. And we're also proudly to see our efforts are well recognized by the investors and rating agencies. And on the other hand, we also have our operations in UK, which also well guided by the regulators in UK on ESG as well. So for example, the requirement on the minimum energy performance standards, which intends the EPC of B for all the offices asset by 2030, set by the UK government, which has set a very good direction for our property asset management business in UK, which in turn will further enhance our energy consumption efficiencies at the group level. So that's how we see UK has been leading the ESG research and development and incorporate into the business operations, and we also benefit from it.
That's perfect, thank you. And it's really great to hear I guess from each of you, everybody's mentioned the positive views of the UK regulatory environment, and clearly that came out in Max's presentation earlier on as well. I guess, Jan Hao, if you look at China Construction Bank, you as an organization recently made a large issuance of ESG bonds. I suppose, therefore, as a banking institution really leading the charge on ESG and sustainability within China. Perhaps you could just give us a little bit of flavor about how Chinese investors look at ESG and sustainability.
Yeah, actually, Chinese investors are very interested in invest in ESG-related bonds and some other instruments. And for our CCB, and from our aspect, I think the UK government is ensuring the financial sector that is well equipped. So aligning with the financial system with sustainable future will bring real benefits for the environment and society. So UK's global leadership urges the sustainable investing call to action and make the UK the best place in the world for green and sustainable investment. So green finance is our CCB's key strategy. So we are proud to be part of it, and also for the Chinese investor as well. So we are happy to support the UK's green finance and Fusen and other firms that are in the roadmap to the sustainable investing.
Excellent. Gavin, from an asset manager perspective, obviously you have the presence in China, you have a large number of Chinese investors investing through to the UK. Do you see demand for ESG and sustainability? Do you see it going sort of upwards, and where do you think it will develop in the coming years?
Well, there's no doubt that in the past, the appreciation of ESG, demand for ESG has been particularly concentrated in Europe. I think something like 35% of European investment funds have some sort of ESG alignment. But what we've seen in the last 2 or 3 years is a big uptick in interest in ESG investing from China, indeed the rest of the Asia-Pacific region. 5 years ago, we would have talked to clients in China about ESG and they would have shown little interest, but that has changed dramatically. And what you're also beginning to see now is a pickup in regulation of ESG, the requirements to disclose ESG characteristics, requirements both on companies and on investors in ESG entities. So regulation tends to go hand in hand with demand from the underlying client base. So we're seeing a similar pattern emerge in China that we've seen in the past in Europe. And if that's anything to go by, within the next 5 years, we will see ESG as being a primary driver of appetite from Chinese investors. And I think that's very consistent with the approach that the Chinese authorities are taking in particular on a very impressive response to climate change in China. That will feed its way down to investors.
Excellent. Stuart, just one more area before we move on to the Q&A that I would like to touch on, and then there's the practical question of Chinese institutions coming to the UK and establishing themselves. Clearly, HSBC has been in that loop for probably hundreds of years by now. How do you see the trends in terms of organisations setting up offices here? Where do you see the challenges, and where do you see those challenges being met?
Yeah, in my memory nowadays, there has been more than 10 financial institutions set their subsidiaries in City of London. And I can anticipate that it still keep a very positive trend. So I think the most challenging for us is that the first is talent. We need to just like engage qualified talent that can work in the City of London, also attract a talent to work here. The second is for the regulation. We must understand regulation and the culture. We must fully understand the regulation and the culture here so that we can promote our business smoothly. The last but not the least is about we must understand the risk, the operation and the resilience operation here. So for Chinese financial institutions, we still need a long time to get used to the environment here. For example, for our London branch, we established our presence 30 years ago, but until now, we feel that we're still learning. And I believe that for the most Chinese financial institutions, they still just like have a lot to learn from local market.
Thank you, Jen Hao. And Stuart.
Yes, and then maybe just to add, I mean, I recognise all those points, but I also think that London and the UK is a very easy place to set up and establish a new business for all the reasons we heard from Max earlier on. You know, whether that is the infrastructure, whether it's the regulation, whether it's the various different professionals that exist in the marketplace. And you know, increasingly, I think that the openness for the United Kingdom to really embrace cross-border connectivity even more, and we always have, but I think particularly with China, there is a real impetus. And you know, Gavin mentioned Schroders ambitious in China. You know, you're seeing a lot of UK asset managers also looking to build those connections for the future. So I think it's a two-way thing, and I think we will learn from each other over time as well. But I would say that the UK is a very amenable place to set up a business operation. We're a friendly bunch here.
I like to think we are. Excellent, thank you, Stuart. Okay, we'll move on now to Q&A, and I see we've got lots of questions through from the audience. One of the interesting ones here, we talk a lot about London, and obviously we're representing the City of London, but the City of London as an institution, of course, represents the entire UK financial services industry. How can the UK boost the visibility of cities outside London? That's an interesting one. Stuart, now HSBC as a group has invested quite heavily in Birmingham. I know the retail bank is based there. Perhaps I could start with you, and then we'll go around the panel for views on that.
Yes, no, of course, you're right. You know, we have a huge presence in Birmingham as a group. We have operations, as you would imagine, all over the United Kingdom. From an asset management perspective, the hubs are London, Edinburgh. We have operations in Aberdeen and Glasgow, and of course Manchester. So you know, all of the main cities have very good financial ecosystems. And increasingly, I think it's great to expand, and we're doing quite a lot of what we call nearshoring. From London, we have operations in Southampton, as an example. So that's also a great aspect of the United Kingdom, that you have professionals in different locations. Clearly, in the hybrid way of working as well, there's an ability now for people to work all over the country, and obviously commute in for on-sites as opposed to off-sites. So I think there's a really exciting new way of working evolving in the United Kingdom around those hubs. So think of it almost like a hub-spoke model that's evolving.
Perfect, thank you. And Jen, any thoughts from you on how we boost the visibility, not just of London, but of other cities and regions in the UK?
Yeah, two opinions from mine. The first is that we need to develop a strong infrastructure, transportation, supply chain connectivity, and communication networks. And the second is that we should have a clear vision of how each city can develop itself in terms of its strengths. For example, for Manchester, we can just like build it as an entrepreneurial hub. And for the Edinburgh, is the hub of asset management. So we must differentiate the characteristic of each city so that we can build it afterwards.
Absolutely. Gavin, it would be remiss of us not to mention that obviously Scotland, Edinburgh has a very strong asset management heritage, as Jan Howe mentioned there. Do you see Chinese investors looking outside of London, or are we very London-centric as an industry?
And I think one thing that's changing that approach is the growing importance of private assets. So a lot of Chinese investors are now looking to make direct investments into parts of the UK economy. So it might be real estate in Manchester. It might be a diversified portfolio of green assets like solar and wind farms. I think that's widening the perspective that Chinese investors have of what the UK can offer, so that when they come to the UK, they don't just come to London, they look at investment opportunities much more broadly. So I think that's the move away from traditional listed assets to private assets will accelerate that trend.
Thank you. Ning, I suppose from an investor perspective then, it'd be interesting to get your views quickly on this, looking at private asset investments or investments more broadly around the UK. Is that something that sits on Fosun's agenda?
I believe UK always remain very attractive for all the investors, not just in China, but also globally, because UK itself is already a very good branding because we are the consumer product group. So I'm more looking at the consumer products in terms of the nursery brand. We have Silver Cross, and also they have very good quality with long heritage from this brand. It's already a good branding. And in terms of the other business like the fashion business, London got one of the most important London Fashion Week. Is probably one of the most important fashion week in the world. And also on the Premier League, it's also a very good branding for the Chinese investors, because I think these brandings definitely will attract a lot of investors from the world.
Yeah, I think that's really important, actually. I think everybody around the world knows Manchester because of Manchester United and Manchester City. So branding-wise, very powerful. Okay, just looking down the list of questions we've got, what can the UK government do to make the UK more attractive to Chinese investors? I suppose we talked a lot about the strengths of the regulatory regime and so on, but clearly there's more that we could do. Ning, again, speaking as a representative of a firm that makes significant investments in businesses, what do you think the UK can do to make the country more attractive?
In terms of the more attractive from the investment perspective, I think currently the regulators has provided a very good framework for overseas investors, and regarding each different business that will have a very comprehensive regulatory framework to govern that. I think it's very good for the investor to feel comfortable and reliable to invest in UK. And for the future, I believe after the COVID-19, with more and more physical visit between the two countries, definitely that will attract more trend from the China.
Excellent. Gavin, if I turn to you now with this question, what are the primary asset classes and strategies that are particularly of interest to Chinese investors outside China?
One of the things we've realized is that the first move a lot of Chinese investors make when they're investing internationally is through a multi-asset mandate. So covering a broad range of asset classes, can be both listed and private. And the reason they do that is to accelerate knowledge transfer. So part of the service that we offer is very frequent interaction with our clients in China in terms of understanding what it is that's driving a particular investment decision. If we made a move into high yield bonds, why have we done that? So I think that knowledge transfer is something that asset managers, I think, are increasingly obliged to provide to asset owners. And that's something we find particularly in China. I think I mentioned private assets a moment ago, and I think private assets which are linked to the green agenda, to climate change, are particularly important. For example, Schroders acquired a business called Greencoat, which is one of the largest operators in the UK of wind farms and solar farms. And that's exactly the area where we're seeing conversations with Chinese and other foreign investors. So I think it's really important for the UK to remain at the forefront of the green agenda.
Thank you. And Stuart, perhaps you may also have something to share on this. Asset classes, strategies of interest to Chinese investors outside China.
Yes, well, just to emphasize what Gavin has said, we see exactly the same sort of flow in terms of capital coming into multi-asset, but also into private assets. And it's interesting you mentioned Greencoat, Gavin, because we're one of the main investors in Greencoat through our pension scheme, for good reason. They are a fantastic organisation that have been pioneers investing in renewable infrastructure equity for many years. And those are the sorts of assets, whether it's infrastructure equity, infrastructure debt, private equity, private debt, but again, with a sustainable overlay. This is where I think the UK investment management industry is really quite progressive. They are really taking some of the positives and experience from ESG integration on the listed side, engagement into the private asset side. And private assets, as we know, is an incredible diversifier in terms of cash flow cash flows, or cash flow matching asset that asset owners are looking for. So I think that's a particularly interesting area for Chinese capital flows. But I would also say, both ways. It would be great if we could see, international investors investing more into China as well. And one thing we are looking at is setting up a renewable infra equity strategy in China for exactly the same reasons. So this is where I think we will share and we will learn from each other over time as to major financial centers.
I think that's really important, that this is as you said earlier on, it's a two-way relationship. And indeed, in terms of technology and innovation, Gavin, you mentioned earlier that we have a lot to learn from China, and we benefit equally from that relationship. Jianhao, perhaps then an opportunity for you to answer either of those questions then, about what asset classes and strategies are most of interest to Chinese investors outside China, or where do you think sort of the opportunities for overseas investors in China really lie?
Yeah, that's the question. So for overseas investors, so nowadays they would like to pursue stable probability investment. So I think Chinese treasury bond is still a big favor for them. So we can see that in the past 5 years there's a continuous inbound in that asset. For the Chinese investment, so I have discussed with many potential investors. They are still quite interested in investing long-term infrastructure assets in London, in the UK, because they believe that it's well regulated with a very long-term stable cash flow. So many Chinese investors would think that it's a good asset. And for the industrial, they are quite interested in nowadays in energy and also for e-commerce aspect.
Yes, that makes a lot of sense. And certainly the infrastructure piece is something that we see a lot of in the conversations we have with Chinese investors. There's a question here. I am just going in order. Stuart, I'm going to come to you straight away on this, given you mentioned earlier on natural capital and biodiversity. The question is, there's lots of great talk about green finance, etc. Which areas should Chinese investors be looking at?
Yeah, thank you for that. And obviously, natural capital biodiversity should be one area, and I think that this is a super interesting area for us to support and mitigate against climate change. The sorts of assets that we're talking about range from the traditional assets that people will be more familiar about, such as timberland and farmland, particularly taking more advanced techniques to farms where you can enhance the productivity, but also new areas such as artificial reefs as carbon sinks, mangrove plantations along sort of coastlines to mitigate against rising sea levels, and so on and so forth, and the infrastructure that is required around that as well. So I think there are huge opportunities to invest in emerging markets as well, in terms of where we do see some of these issues arising, particularly in Latin America and in Southeast Asia. And I think there is a great opportunity for Chinese investors to become leaders in this space, not only as investors but also in terms of the technology and the clean tech that comes around that, as we believe the UK will be a leader as well. So maybe we can become co-leaders. Excellent.
It's important you mentioned the global aspect of that. We talked about investing in green inside the UK, but also there's the much larger global opportunity being routed through the UK, and the UK providing connectivity into that. Gavin, perhaps then you could just, I know we've talked about green and we've talked about ESG and sustainability, but just expand upon that slightly then. So within sustainability, looking globally, looking how the UK as an industry can support that, where would you be advising Chinese investors to focus their attention?
I mean, I think that the UK certainly has built a very significant ecosystem in sustainability. And by that I mean talent coming from a number of different disciplines. So sustainability is a very hot area when it comes to recruitment. But I think it's one of the things the asset management industry is doing is looking rather more widely in terms of where they identify future talents. It could be academic, it could be from think tanks, it could be from direct involvement with energy companies. So I think building that ecosystem is something that we need to focus on in the UK, and bringing in expertise that has been earned in industries beyond asset management. I think in terms of the geographical spread of sustainability, there is an enormous range. You can think of at the one extreme of some of the Northern European countries which have built sustainability into their economies over a number of years, but equally there are emerging markets where harnessing solar power, for example, is a significant source of investment, and where infrastructure it will produce higher returns than in developed markets. So I think sustainability is such a wide area of focus that it would be wrong to limit it to one or two geographies.
Yes, absolutely. Thank you. There are lots more questions, and I'm sorry that we haven't been able to get to all of them, but if my clock is right, then we are just about out of time. So may I just say thank you so much to all of our panelists for their insights today, for joining us today. I think it's been a really useful and interesting discussion, and I'd like to hand back now to the Lord Mayor to share his perspectives and then to close the session. Thank you.
Thank you very much, Christian. And indeed, I have to agree with you. That's been a really interesting, very insightful panel session. I've certainly learned a great deal with many perspectives, many really expert perspectives being shared with us. I'd also like to bring in Sheriff and Alderman Alison Gowman, perhaps to share some thoughts from our position here in the City of London.
Thank you very much, Lord Mayor, and I totally agree with you. The panel have been amazingly interesting and very supportive of how the UK and London as a market has such fundamental strengths. I think Ning talked about established positions, and that's absolutely true. The city has been going for centuries, but actually what it has done over the last 10 years or so or more is actually repositioned itself to make sure that our outlook is global, and we have created a world-class business environment, and you have all very kindly spoken about that, both from the asset management point of view, but also from those of you who are actually investing here in the UK, and how it has been an easier transition, and that the UK and London provides a skilled and very entrepreneurial workforce. We also talked very much, I think, Stuart, you started on this, about the breadth and depth of the UK offer, all those many reasons around the global connectivity, and how, therefore, it's actually a good place to invest. And I was also interested by the time we got towards the end that Yin Hao and Ning had also talked about how there's so much to learn from China as well. It's not a one-way street. The Chinese market itself is moving strongly to be able to provide those complementary strengths. So I thought there were maybe three themes perhaps that came out to me. First of all, maybe as a lawyer, you might not be surprised, I'd like to talk about UK regulation. And that's really important, the way that UK regulators address these new approaches, resulting sometimes from disruptors into the system, but in a way that we are actually moving to make sure we actually embrace innovation with the regulatory sandbox that we've been talking about, but also in a way that still protects customers, because that's also key. I think I'd like to say that our UK regulation has been agile and coherent. And also being, as I said, a lawyer, as is the Lord Mayor, the whole area of the UK as a base for strong legal resources, a strong legal environment, and also the place for an arbitration, which has been a strong earner for the UK legal economy around arbitration in so many areas. Again, I think Ning talked about our talent, our multicultural talent, as Stuart and Gavin both spoke about. And this is really important to our business setup here, and something that the Lord Mayor particularly holds to heart around his own themes of working with the widest kind of workforce. The workforce is environmentally and educationally and culturally so strong. And of course, ESG, which is very close to my heart. I'm a non-exec director on the Green Finance Institute based here in London. But ESG is clearly one of the most prominent issues that we've heard about for companies and for the government. We all know it requires us to work in a slightly different way, And it's clearly an area where innovation around sustainable and green finance is so important. And I'd say that both the UK and China have really strong offerings here. That's been shown in some of the independent surveys, but also in the comments made by the panelists today. The UK leads in asset management globally. We've heard of the trillions under management here and the amount that are from overseas people. These are all now incorporating ESG considerations in their metrics, their disclosures, and in the data. I think that's so key. And the Green Finance Institute, which has only been going 3 years, but was very much key around COP26, around encouraging the private finance to actually build on that governmental and international finance to make sure that private finance is transitioning to the green and net zero carbon world that we are all expecting and need to work towards. So these are all areas where asset management and London are leading the way, and in partnership with those Chinese businesses and China will be a very successful future for us all. Thank you very much. Thank you, Lord Mayor.
Thank you, Alison. I think we'll echo that, the importance of the future partnership between the UK and China, very much the focus of my virtual visit to China over the next few days. Thank you again, Christian, for moderating that really excellent panel, and Ming, Gavin, Stuart and Jin Hao as well for your participation. As I say, we learned a great deal from you this morning. And thank you all for joining us wherever you are in the world. It's been a pleasure having you with us today. I look forward to a successful few days on my virtual visit to China. Thank you very much for a really good start to that visit. Good morning, good afternoon to you all. Bye-bye.